Okay, Steve R.
See you all tomorrow.
Looking forward to meeting you, greeting you. Welcome to F.A.C.E at F45 Trading. Steve R.
Hi, Dale. How you doing?
Hi, Steve. Nice to meet you.
You can hear me okay?
Yeah, loud and clear, buddy.
Great, thanks.
Thank you for joining us today.
I appreciate you having me. It's I've been found your interviews there. I stumbled onto them there a few months ago, and I've been listening there whenever I get a chance ever since. You guys got some great content going, and just wanted to say thank you very much for having me on.
Well, you're very welcome. You know, there is a screen share option. If you want to show any charts or a website,
you betcha. I'm just, I've got a few monitors set up here, so I'm just looking at the options here right now, and
there we go.
You can see my screen there. See my
cursor? Yeah, we have the Dixie up here. So I'm always interested, Steve, in how it began for you, how you ended up becoming a trader, getting involved in the industry. I believe you are a signal provider. Bring us back to the beginning. Tell us about the long and winding road to where you are now.
You know, Dale, you're exactly hit the nail on the head there. A long, windy road with full of ups and downs. So I'm almost into my 40s now here, and I've been actively trading the market now for about 20 years. And I would have to honestly say that the past 15 of those years have been trading very badly. And I basically had I always loved stock markets and trading, and my father actually had a fairly sizable portfolio, and I just on my 18th birthday said, maybe you could teach me a couple of things, and I'll fund an account, and we could do start building a bit of a nest egg. And so I put some money into an account, and it just so happened I had a good family friend who was a stockbroker, and he took that account, and this was back in the the market bull run of the late 90s, and I'll tell you, oh yeah, I mean, hey, you want to trade stocks, that was a great time to be in, because I thought basically anything that I did was the right move, and I was an amazing trader. And then,
yes. A lot of geniuses. A lot of geniuses during the .com mania.
Oh, yeah, you betcha. Well, and the thing of it is, so I live in a part of the world, I'm up in Canada, in Western Canada, and we were very, very heavily oil and gas related in our industry. And so there was a lot of money to be made as well, too, in a lot of oil and gas. And long story short, that family friend of mine did an amazing job with my portfolio. And, as a very, very young kid, I made a lot of money, and I thought I was untouchable. I couldn't do it any wrong. And then he ended up leaving the business, and the next guy came in, and he, did what he could do. And again, he sent me some ideas, and I said, yeah, buy. I didn't even really understand the concept of going short at that time or anything like that. I just thought all you did was buy these markets because they just keep going up and don't have any, top side to them. And so I had worked with him for a little while, and he eventually left, and the next guy came in, and he just basically got me into every single terrible pump and dump stock he could possibly find. He sold me on it. And brokers, I mean, nothing against them, I'm sure there's a lot of great ones out there. This one was particularly a bad one, and I'm pretty sure that a lot of these companies had just paid him to get his clients in there and take their money from them. And that's exactly what happened. So my sizable account went down to a fraction of what it was. And at that point, I realized, and this was, my late 20s, at that point, I had realized that if anybody was going to manage my money effectively, it was going to be me. And so I better start actually learning how to trade. So that's where the journey began. I had sourced out.
I really believe that's why we had the explosion in trading education, because people wanted to become self-directed after living through two drawdowns in 2000 and 2007-8. So they said the same thing. to you, even if they were diversified, had some bonds, had some stocks, had a little cash, they still got hurt and didn't even want to open up their brokerage statements for years. So yeah, millions of people went through what you've gone through. So did you have any teachers after you decided you were going to learn how to trade? Any mentors or books that were a big influence on your learning curve?
Yeah, well, my journey began. I had really followed the teachings of in the books of Robert Kiyosaki, and he ended up he just had a great concept of the how to actually move money around in the different quadrants of cash flow and everything else. And I really took to that in the beginning, and so he offered a program, a very expensive program that I looked into, and I thought, wow, this is exactly what I want to know. It was, stock trading 101. It was an introduction into futures and commodities and, hedging programs and things like that. So I delved into that for a few years, and I learned, how to use, indicators, RSIs, MACDs,
Well, you don't use them anymore.
I don't rely on them. Every now and then I'll put them up on my charts. And basically what ended up happening, Dale, was I took that training and I kind of thought, well, this is it. I should be profitable now. I can go out and I can take on the world. And it just wasn't coming to fruition for me. It just wasn't, I would see the setups and I would act on them, but it just I wouldn't see the continuation in the moves that I was expecting. And so I thought there's got to be something a little bit more to this. And then it was about 3 or 4 years ago, I had stumbled onto Inner Circle Trader, and
okay, Michael.
Yes, yeah. I really took hold of his concepts and poured through his materials, and I really, it's not so much on what's going on the charts, but it's more so the theory behind what's happening, especially in the Forex markets. Commodity markets, it's obviously still somewhat based on supply and demand, and if there's a crop failure in the southern hemisphere, it's obviously going to affect price, and then that's the supply factor, right?
So Michael's kind of thesis is that the market will gravitate almost like magnets to where liquidity is. Isn't that it?
It's very, yeah. Where are all the orders?
Okay, all right. Where are the orders? Okay.
Yeah.
So what are you seeing here in the dollar index now? We just made marginal new highs after the ECB, and we're stalling out here a little bit. What's your eye telling you here? And what are your red horizontal lines? Is that where the orders are?
Yeah, so with the dollar index, this has been an interesting one. So I, in terms of my analysis and what I look for, I'll trade the majors. I don't do too many exotics, and I mainly focus a lot on commodities as well too, as you can see down here at the bottom of my chart.
Okay.
But what I will typically start my analysis is with the dollar, and then it obviously matriculates down from there. And on a weekly, I'm looking at this thing, and after we came exploding out of this area right here,
right.
And back up to these levels that you see here, the 95 levels. And I'm actually getting some conflicting data because I've got a couple of different demo accounts that I trade on with, just for obviously my analysis purposes. I do a lot of live sessions, and I only trade in demos when I'm doing those live sessions, of course, as you well know. But I'm getting some conflicting data on it. Some of them are having this, the July contract on the dollar had run significantly up to 95.20. This feed here is showing, just barely breaking the 95 level. And then I've got some other conflicting data, like on TradingView, for instance, where I'll see if I can bring this over here. If you can see this chart here.
Yeah, it took out the stops over the previous high.
A clear run through. That's right. So right now it's at a bit of an inflection zone. If we had been having this conversation last week when the price was down here, I could tell you unequivocally that price was going to pop up from here. This was going to be a very, very strong area of support.
Yeah, I was looking for 92.50. It was a very difficult long to catch because it happened on the ECP.
It did, yeah. Yeah, and
I mean, kudos if you did, but you know, when I woke up here in California, euro was already about 40, 50 lower. You know, I have a hard time chasing things, even women. I let trouble find me, Michael.
Yeah.
You know what I mean? Anyway.
I agree with you
Go
100%. I don't chase trades either. That is actually my philosophy. If I'm buying in a market, I'm going to be buying on a down candle. If I'm selling in a market, I'm going to be selling on an up candle, and there's no chasing price. And you miss a lot of moves when that happens because sometimes you just don't know. But I'd rather miss a move and keep the positive equity balance in my account versus getting into a move and it was the wrong move and seeing a drawdown. So that's my theory on it. But
okay, so you know, I'm all for people being able to say I don't know or I was wrong, and you know, right now I'm neutral, and I'm wondering, is there something in here, maybe on a longer term basis? You know, I keep coming back to this because you know we are starting to diverge. I know a lot of people looking for 96, 96.20 to 97. But it wouldn't be interesting if we stall here a little over 95 or just above it and then pull back to 91 and then the next time back through 95, you're talking 102. But
right.
you know, sometimes I'll visualize things and maybe we're going to put in a right shoulder here. What do you think?
100%, Dale. And that's so what I'm looking at here is, and I think we'll probably be able to tell here this week going into next. They could chop it sideways here for, you know, another half a week to week easily before making a final decision, which we've all seen that before. And I think we're going to find out convincingly. So on this chart here, it hasn't done it quite yet, but if we do see that reaction, it's just going to be a long wick up here, and then you'll start to see price fall off. This under here, this area right here at, you know, 93, I would even say more like 93.75. If I can get that up here, that's sort of going to be the line in the sand. If this level gets broken in here, then I believe this double bottom right here is going to be the next target, and then we could, you know, the dominoes could fall off, and I wouldn't expect price to rebalance until we got back down to this consolidation area in here. So that's my analysis on the you know, the downside. If we do get that run up here on liquidity, we'll see it reject, and then that's where we're going to be headed. But I believe there's some you know, some geopolitical events that are happening right now. Obviously, the trade wars with China and everything else. You know, the Feds came out with their interest rate hikes recently, and more planned later on in the year. That's all, in my mind, that all is going to bolster a stronger dollar, and I believe we're going to see higher prices on that. So, you know, if I go out to, as I was showing you here, on a higher time frame, I could very easily see if that trend continues and if it does what I think it's going to do. I believe the first target we're going to be looking at is going to be this this green level up here. You know, we're talking about a little bit, but basically the 96.30 level I think is going to be easily taken. And I'll be honest with you, Dale. If you look at this right now, you look what they've done. They've ran price all the way up here just to fall short of these equal highs, and then they pulled back. It was a very, very slight retracement. If you actually take a fib off of this low to this high, yeah, we've all done that, so we know the levels.
But 23%, it was very shallow. That's your point, which demonstrates strength. You're correct.
Yeah. They're coming up here and they're just hovering under these lows here, and I think this is what they're building in is a false sense of security up here with a lot of traders. That's right. Yeah, they're all saying that's resistance. It's not going above 95. You know, this thing's going to hell in a handbasket in a big hurry, and I'm getting all over this short. And all they're going to do is they're going to blow through this area, and they're not. And it's going to be another leg like this, in my opinion. That's what I think we're going to see come in here with the strength. And again, it's only because if these geopolitical events weren't taking place right now, dollar typically right now at this point in time seasonally is bearish. It's coming into a bearish point of time. So this should be going down. And you can see, I mean, we're not there yet. So I believe the magician, so to speak, will show his tricks here in a few days, maybe in about a week. I believe they'll finally either run this level or it'll fall out of bed, and it'll be pretty obvious when it doesn't.
So you've been a long-term follower of oil, energy, probably miners too, from where you're geographically were brought up in. You have a view on oil here?
Yes.
Yeah. Okay, go ahead.
So I've been discussing oil now for a very long time. I was a buyer up until about the 68, 69 level. And my last trade on oil was right here. I got into a small long position here, got out, and then it started to chop sideways. And then this is all of a sudden now where OPEC has come in saying there's some grumblings from Russia and a couple of the other major oil producing countries about how they'd like to start increasing production, and potentially we could start to see the market falter. They have come in saying that all of the surplus has been basically extinguished and that they're back to regular storage levels. And that's kind of why you see this drive in price here the past, year essentially. It is just them cutting production. So now they're in the OPEC talks right now, and I stopped trading it right here. And I kind of had an inkling that this was going to happen. I didn't know it was going to happen. I didn't trade this down. I don't like to be part of markets that I don't really like to counter trade, basically counter trend trade. And you can see obviously here we're in a very strong bull market. Now, long term, I believe this is going to continue higher. I really, really do. I believe that 74, 75 are easily going to get hit, and I think right now they're just they're doing these talks, and Russia and everyone else is going to come in and saying we want to increase production and bring price around 60 level, which is what I have marked on the chart here. But I think that's just going to be temporary. I don't believe that they're going to hold price and suppress price like they had done, in the past down in these areas back here in 2005 and 2016. I think personally, that they've suppressed price long enough. They came down, they cleared out all of the liquidity under the market from that raging bull market from 2009. And I believe that we have higher prices to come. And you got to look at it, Dale. I mean, think about it. Everything you touch and everything you interact with these days is oil. I mean, it's all built by it. It's the entire world runs on oil. As much as any green supporters and solar this and clean energy that want to come in and say that oil is an old dinosaur product and has no use in the world, it's absolutely 100% false. You cannot operate this world and do anything that we're doing today without oil, and the price will only continue to go up. It's a diminishing supply, and as such, the price will go higher. And this is just
wasn't oil formed from old dinosaurs?
There you go, man. It was. Yeah.
So you can't call it. So they're right saying it's an old dinosaur. Bullish oil. Anything on the precious metals, Steve, that you're watching here? Silver had a nice run and then gave it all back with dollar strength, and gold has been under pressure here.
Yeah, I just want to, before I flip over to gold, if I could, Dale, I just want to let you know, I think in terms of, just to wrap up my analysis on this, I believe this little area right under here that I have highlighted at 60 level, I think they're going to come in and tag that, and they'll probably do that by the end of these talks here with OPEC. And from there,
one more flush.
I believe so, yeah. It's kind of a symmetrical swing that you've got from this level here down to this level here, which would take us sub 60. And then from there, I think we'll start to see the bulls step back in. That's my personal opinion.
Okay.
Now, when
nice view.
We talk about gold. This is obviously, tied in with the U.S. dollar. So, a pretty simple analysis, to try and save some time here. If the U.S. dollar is going up, more than likely, they're going to suppress the price of gold. We'll see further downside. And I've got a level. I actually marked this level out on my charts here a few weeks ago when price was doing this here, and you can see, followed through very, very nicely. I don't think the downside is done yet. And I mean, gold is it's kind of one of those things where everyone thinks it should just be going higher and higher and higher and going straight to the moon. And it's not, they're just really, really holding back on price. Unfortunately, we're not seeing the highs that I think it should be at. I personally believe that gold should be a much higher value commodity than what it is, but we're at the mercy of the banks.
Well, we break out over that blue line, it sure will be.
That's right. Oh, yeah.
Horizontal blue line.
Yeah.
But maybe one more shakeout before that happens to,
yeah,
1220, 1180, something like that. You have anything down there?
Yeah, right about here. Just a sub 12, I believe, is 1180, somewhere in right around there, 1185.
That's my level. Well, it's both of our levels. Yeah, around 1180 into the fall. Okay.
And especially if we see that expansion on the dollar, if I believe that we do see, even if dollar gets up to 98, then that would be a real strong case for gold to start to collapse down to that level there. So, and then I'd be looking at some kind of a support to form at that area.
Okay. Well, now would be a good time to show your website and talk about what you do and how people could get in touch with you, Mike.
So basically, this is go to our website here. So what I did, we're relatively new. I had found out or found 4 other analysts, including myself, who all trade the same style. So we all have the same mentality. We were all trained by the same gentleman. And we all have a very, very strict trading regiment. So in terms of money management and everything else, and I've brought everybody together, and we offer signal services for our clients and market analysis. We do a lot of free market analysis on YouTube. It's just F45 trading on YouTube. You can find us. It's all for free. And then from there, we have a great group. We have a chat room that people can get involved in, and we post charts regularly. And again, we have a signal service for all of our paying members who want some market direction, some buy entries, sell entries, and everything else in between. And we're doing very, very well. Again, we're kind of in our infancy stages. This was started up early last fall, and since then we've been growing by leaps and bounds, and things have just been great. And I'll tell you, we've got such a great group of traders, and kind of such as like yourself, Dale. You've put together a group of guys a group of people who they're vested in the markets. They watch charts all day, constantly bouncing ideas off of each other, and that's the type of environment that I really think people accelerate in, and they can kind of get their ideas picked over, and hey, here's an idea on a chart, and just a great group of people is sort of what I'm trying to put together. Like-minded, attracts like-minded, and I think we've done a good job of that so far. So you can find all of that at f45trading.com. That's our Twitter handle right there. And I've got another social media platform on Instagram, obviously at Future 45 Trade Signals. But that's pretty much how we get our content out.
Well, Steve, it's really been nice knowing you. I appreciate the views. Sharing your journey with us and some of your outlooks and a few instruments, and wish you continued success with your new venture, and that whoever is in your company, the words that you say bless them and pips rain down on you and all of your membership.
Yeah, much appreciated. The pleasure's all mine. And if there's anything I can do for you in the future, please don't hesitate to reach out. Okay,
thank you very much, Mike. Follow Mike at F45 Trading. That's correct, Mike. And that's Wednesday. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Good hunting, everyone. And see everyone tomorrow. Thanks again, Steve.
You bet. Thanks, Mike. Thanks, Dale.
My trading warrior brother, Steve R.